What's up, guys? Welcome back to another video. Capital One Financial just announced their huge acquisition of Discover Financial Services in an all-stock transaction, and in this video I want to explain why I think that's a good thing, not only for both companies but also for the investors and for the larger financial world. It represents a significant consolidation in the credit card industry. But the point that I'm going to make is that this deal promises efficiency gains and growth opportunities that, as I said, is a win-win-win for everyone. So let's check out the acquisition. So it was an all-stock transaction where Capital One is paying a premium to acquire Discover. Discover shareholders are going to receive about one Capital One share for every Discover share that they owned before. And it's crazy. This is a 26.6% premium price that's based on Discover's pre-announcement closing price. Now, when this deal closes, Capital One shareholders will own about 60% of the company, and Discover shareholders will own about 40%. So it's pretty I mean, this isn't, it's almost not an acquisition. This is a merger, right? 60-40 is going to be the split on ownership between Capital One and Discover if the deal goes through. Now, Capital One, if you're not familiar with either one of the companies, Capital One, the scale of this company is huge. It's one of the largest credit card issuers and regional banks in the United States with $479 billion in assets. Some of the products it offers a wide range of financial services, but it's known for their Venture and Spark credit cards. And when it comes to their operational model, they're an online first bank with several physical branches. So that's Capital One. Now let's look at Discover. Discover, their business focus is they're a credit card company with a large cardholder network. And the cardholder network is so important for this deal. This is what makes them unique. They operate their own closed-loop payment network. So what's going to happen to the brand? And I'm going to talk about that in a minute. But what's going to happen to the brand? Because I was thinking, they buy. Is this the end of Discover? Like, is this the end of us using that brand, seeing that lingo? Well, Capital One actually intends to retain the Discover brand. However, there aren't any specifics. The details haven't been clarified yet, so you just have to stay tuned. We'll just have to wait and see exactly what Capital One intends to do with the brand. But my question is really, why is the acquisition happening? Well, doing a little bit of research, we identified three primary reasons. First of all, efficiency gains. So we already talked about how Discover has its own network. Well, there's significant synergies that are expected from merging complementary services. So you're going to get efficiency gains. Number two is the financial benefits. Projected $2.7 billion in synergies by 2027. And that means that the deal is over 15% accretive to EPS, which means that they're going to grow 15% on EPS because of the deal. So that's the expected increase. Number three, okay, so again, number one, efficiency gains. The number two reason that they're acquiring this, financial benefits. And number three, strategic advantages. Owning a major payment network will boost Capital One's interchange fee income and their overall network growth. However, all of this isn't coming without challenges, and we do have to talk about that. So the main challenge is competition. This deal may face some scrutiny due to its impact on competition in the credit card marketplace. And so that the government is going to get involved. So, it's going to pend regulatory approval. And because of that, there's a lot of uncertainty that surrounds this deal. And of course, that's expected anytime news breaks that one of these major acquisitions is going to happen. That it's going to have to get approved, that the government's going to have to get involved, and you're going to have the regulatory approval. So, but interestingly though, many people are anticipating that the approval is going to happen. So it's not so much up in the air. Really, most analysts are suspecting that this deal won't have a problem, that they will approve this and it'll move forward. So Capital One's acquisition of Discover, it represents a significant event in the financial sector. This isn't just a small thing that's happening, and the potential is that there's going to be substantial efficiencies that are improved. There's going to be substantial growth. The strategic benefits are there, and even all this despite the regulatory challenges. So anyway, stay tuned. We're gonna keep following the story and see what happens. But that's all for this video. If you enjoyed this video, like and subscribe. I do want to say that I don't hold any shares in either one of these companies, Capital One or Discover, but it was an interesting story to me, so that's why I wanted to pick it up. And in all these video guys, I will always let you know whether or not I own stock in the companies. Anyway, that's all for today. Thanks for watching, guys. Like, subscribe. I'll see you next time.